Thank you for tuning in to this segment of our recent workshop, 10 Things I Wish I'd Asked My Lawyer. In the next video, George will answer the question, should I get more insurance just in case my dog bites the mailman? Enjoy the viewing.
A dog bites someone in America more than 4.7 million times a year. 800,000 victims receive medical attention. 30,000 cases are turned into insurance companies. A mailman is bitten by a dog 30 times a day.
Just one guy?
It makes you wonder why we have dogs. How many of us have dogs here? All pet trust candidates. Okay. If you think plaintiffs' lawyers have missed this, this fact, if you Google Georgia dog bite attorney, 1,470,000 hits. Georgia dog bite attorney. Wow. Google is an amazing thing. But this is not just an issue for dog owners. There are lots of risks that present problems for us as we go through our lives. Let's talk about what our friends and clients should do. Larry, go ahead. The first level of insurance protection is health and life insurance. One recent study of bankruptcy filings in 5 federal districts found that more than 50% of the bankruptcy filings were as a result of medical catastrophe, which destroyed the financial wherewithal of the family. More than 2 million people were affected if you account the bankruptcy filers and their dependents. In ancient Rome, an insolvent debtor was quartered and dragged. It was distributed to the creditors. In America, your assets are quartered and distributed to your creditors. We want you to remain in one piece, and we want your assets to remain intact. Life insurance also fills a basic need in many plans. Life insurance can fill an income replacement need if the breadwinner in the family passes away prematurely. Life insurance can also be used to pay estate taxes if you have an estate where a taxable estate, and we're in a period where the exemption amount is about to go down dramatically. We'll be looking at life insurance again as a vehicle to pay estate taxes and allow children to inherit the full value of an estate. Life insurance also has a part to play as an income tax efficient investment vehicle. And if you haven't spoken to us or your insurance advisor about the efficiency of life insurance, it's a good time to do it. We're fielding more and more questions now about long-term care insurance. The Department of Health and Human Services recently announced that once you reach 65, there is a 45% chance that you will spend some time in a nursing home, and 10% of that group will spend more than 5 years in a nursing home. The cost of long-term care in Atlanta now, in the metro Atlanta area, averages $67,000 a year. The high is $85,000 a year. I'm experiencing this situation personally. My mother, in the last few months, we placed my mother in an independent living arrangement on her way toward assisted living and memory care. I just returned from upstate New York, where my wife and I visited her 84-year-old mother, who would be much better served by an independent living facility than remaining in her home. She's had 2 strokes. So this is an issue that's facing me, facing those in my generation, and many of us who have parents who are still alive. The long-term care insurance analysis is really a numerical analysis. For many, many years, I have argued that most of our clients can self-insure, that net worths are great enough to pay these annual costs. I actually ran the numbers myself, and a few months ago purchased a long-term care policy for myself. So with the costs of long-term care and the significant preponderance of long-term care, it's a good idea for all of us to take a look at our long-term care options. Everybody in this room is familiar with liability insurance. I'm talking about auto, home, boat insurance. Unusual protections are included in that policy. For example, if you serve on the board of a charity, then you are protected for injuries or for judgment suits that result from your service on a charity, also being associated with the homeowners association. In addition to basic home, life, and auto policies, most everyone in this room should have, and certainly consider, an umbrella policy. Umbrella insurance provides broad coverage that layers on top of the underlying liability coverage and also insures against additional risks. For example, false arrest, libel, slander, invasion of privacy. When considering an umbrella policy, you need to look honestly at your risks. Now, you are going to love this. A number of years ago, I had a swimming pool. In addition to our swimming pool, I constructed a 180-foot zip line suspended 35 feet above the ground. What was I thinking? We had a client that did rigging for the circus, and he came out, and I thought this was going to be a little project. My goodness, by the time we were done, we were 35 feet off the ground. And I had kids swinging down this zip line. I tripled my umbrella coverage. After a period of time, I found someone who had a greater risk tolerance than I had. We sold the house to him, and I moved on a small lake. Now, there are risks associated with living on a lake, and my wife and I consider our umbrella needs specifically with respect to the risks that are possible living where we live on this small lake in northwest Roswell. Umbrella coverage costs less than $150 per $1 million of coverage. It is very inexpensive coverage, and it's something that everyone should have. It's far better to be safe than sorry when you're looking at your insurance risks. Property and casualty insurance should also be covered on personal and business assets. This damage will cover things like theft, fire, burglary, earthquakes, floods. But pay attention to your policies, because many of these policies include exclusions that you may not be aware of. For example, flooding to my home when there is a storm event may be covered. But if there's a storm event and the lake rises and it floods my home, that's not covered. We had a neighbor on the other side of the lake that during a storm a couple of years ago had a tremendous amount of water come down their property, and it undercut the foundation of the house. And he learned to his surprise that damage caused by water turbidity is an exclusion from a normal property and casualty policy. The repair costs were 50% of the cost of the home, and he found that he was uninsured. So in that case, a flood insurance policy is needed to cover those kinds of risks. So we implore you to take a look at your liability risks. If you want to protect the financial assets that you've worked so hard to accumulate, you need to make sure that you have insurance in place to protect you from catastrophic risks.
We hope you enjoyed that video segment. Other questions that were answered at a recent workshop can be located on our website at our Education and Resources page. Our website address is www.MendenFreiman.com.
For additional information about these topics or our firm, please contact us through our website or call our office at 770-379-1450. We look forward to hearing from you.